Hello and welcome to Looking at the Markets with David Modell. I want to talk about what I call dumpster diving. That's a name that I give to buying stocks that are down 50% or more. So is that something that you want to do a lot of, or is it something you don't want to do? And if you do it, what are some things to look for? Well, I cannot tell you what to buy or what not to buy, but I can tell you what I look for. Yes, sometimes it is possible to buy stocks that are down that much, but you have to be very careful, very selective. You want to look for certain things. So first, how do you look for stocks like that? Well, you can go to finviz, finviz.com, and you click on Screener, and then you can go to, let's say, Technical, okay? The Technical tab, and it's going there right now. And then you can go to 52-week high, low, and then go to 50% or more below the high. And that'll give you stocks that in the past year have gone down, they're down 50% or more. That's one way to do it, okay? And then it'll give you, well, right now it's giving me over 1,000 stocks. So that's kind of a lot. And so you can whittle it down a bit by going to the descriptive tab and then go to market cap and maybe look for just mega or large caps. All right, because that's the first thing I look for. Is I have a tendency to prefer mega or large caps if I'm dumpster diving, because giant companies have a lot more capital, a lot more money, and brand name recognition, things like that, and so they're better able to survive a crash in the stock price. All right, they're better able to recover from that compared to, let's say, a small or micro cap stock. I'm not saying you cannot or should not buy smaller stocks that have gone down a lot, but I would say be very careful with those. All right, so that's the first thing I look for is the size of the company, how much capital they have, do they have brand name recognition, things like that. All right, but that's not the only thing I look for. All right, so let me show you an example. PG&E, all right, that's a utilities stock that at the end of last year had a 50% or more crash, right? And they were doing fine, and then there were California wildfires, and there were questions surrounding whether PG&E, the company, would be blamed for those, and would they be liable financially? And there were, rumors circulating. Could they go into bankruptcy? And so it went down quite a bit. Went down from 50 or about 50 to about half of that. All right. So I did not get into this. I did not buy. All right. And you could say, well, it's a big company, or, it's a sizable company. It's well known. They're a well-known utilities company. So they may have passed that test, but they didn't pass another test, another thing I look for, which is why it went down. Is it a real problem with the company? A problem that could continue, is likely to continue, and is likely to be permanent, cause permanent problems. Well, when I hear about possible bankruptcy proceedings in the near future, I tend to stay away from it. And that's what I heard circulating about this company. Now, if, let's say, Apple went down 50%, like it did in the year 2000 or the year 2008, was anybody really thinking that Apple was going to go bankrupt? I don't think that was a serious thought. At least with me, it wasn't. Some people probably had those thoughts because they were panicking if they owned shares of Apple. But it's such a huge company, and they've been around for such a long time, and they have massive brand name recognition, and they're an international company, and they sell so many devices and products that they went down 50% or more because the whole market went down. There wasn't anything wrong specific to just that company that would have caused that in the year 2000 and then in the year 2008. All of the NASDAQ was going down significantly. So whereas with this, yes, there was pressure on the markets at the end of the year 2018, but nothing of this magnitude. This was caused by a specific problem. I didn't get into it, and so that's the other thing you look for: is why it went down. Is it potentially a permanent problem? All right, or is it just going down because of some irrational panic, or just going down with the entire market? Well, here it was this company-specific problem, and I didn't get into it, and it stabilized, and then it went down another notch from about 25 to 17.5 or so, and then today it went down over 50% again. down to 838. Pretty bad, right? And so you have to find out why it went down. All right, and here's an article from CNN Business. PG&E utility tied to wildfires, these very tragic California wildfires, will file for bankruptcy. That's what I was afraid of, and it happened. Pacific Gas and Electric, facing billions of dollars in claims over the deadly 2018 Camp Fire, is headed to bankruptcy court. And this was California's largest utility. So this was not a small company. So that's not enough. It's not enough just to be a sizable company to dumpster dive and buy some. You probably want it to be down for no good reason, or nothing, at least nothing too permanent. Okay? Nothing that could cause bankruptcy. Here's another example. General Electric, GE. All right, under the leadership of Jeff Immelt, the company's stock went down. And look at that. All right. So if you don't believe in the company's leadership, then you probably want to stay away from that stock. And it's GE, big company, been around a long time, but went down in the last couple of years from 30, cut in half, to 15. Did I get in? No. I was concerned about their leadership, and I'm glad I didn't get in. Now it's $8.90. It went down to $7. So not good, right? So here's another example, Nvidia. And I'm not telling you to buy it or not buy it, but this one's down 50% or more. Okay, well, it went down from 290 to less than 130. And so down 50% or more, but then back up. It's starting to hook back upwards. That's a good sign. And it's a big company. Okay, it's not a small cap or anything like that. And it's up to the 150 level again. So is it a big company? Yeah, it's well known, has name brand recognition in the graphics card space. All right. So why did it go down? Let's look at that. All right. Well, here's an article. It's from Beth McKenna at The Motley Fool, and why Nvidia stock plunged so much. Okay. And I'll put a link in the description of this video to this article in case you want to read it. I'm not saying make your decisions based on one article or anything like that. This is just an example. And she lists the two main catalysts for why it went down so much. And the first one is the fact that all the NASDAQ pretty much, or maybe not every stock in the NASDAQ, but the NASDAQ overall went down substantially at the end of the year. So that's part of it, all right? And then the other catalyst was, you might recall, Nvidia went down quite a bit on the earnings announcement of the third quarter results. Went down quite a bit, and a lot of this had to do with the cryptocurrency hangover that the CEO mentioned. All right. So in the third quarter, according to this article, Nvidia's revenue grew 21% year over year. That sounds good to me. Earnings per share jumped 48%. Sounds great. As far as I'm concerned, earnings per share adjusted for one-time factors rose 38%. So they still have revenues coming in. They're still profitable, as far as I'm concerned. All right, but then the article writer, the author, goes on to say these results were not good enough. Not good enough for Wall Street. Not good enough for Nvidia's. They didn't meet Nvidia's own guidance. Still profitable, though. I mean, these are good numbers, in my opinion. Not too bad. But it wasn't good enough for the expectations, which were probably too high at that time, because Nvidia had gone up so much over the past couple years that the expectations just get so high. All right, doesn't mean it's a bad company. Doesn't mean they're going bankrupt. I don't hear a lot of talk about this company going bankrupt or the stock going to zero or anything like that. And they also had that cryptocurrency hangover because they were tied to cryptocurrency. I'll just read a little bit about that. The management mentioned the crypto hangover in the guidance, that they expect it to continue for another quarter or two. This refers to the excess inventory of mid-range Pascal GPU-based graphics cards in the sales channel due to the cryptocurrency market bust that occurred in early 2018. Some cryptocurrency miners had been using Nvidia's gaming graphics cards rather than its application-specific boards for mining digital currencies. So some of the buyers of the graphics cards had to do with cryptocurrency mining, and that's been under pressure lately. Okay, fine. But is this, again, this is for another quarter or two, and I think a lot of it's priced in. I mean, if you look at how much it's gone down, the markets tend to be forward-looking. So that doesn't mean it's going to go down for another quarter or two. I mean, it went down over the next quarter, obviously, but that doesn't mean it's going to keep going down. I think they priced in that expectation to a certain extent. So that's just my opinion. I don't know what's going to happen, but it certainly is at a good price. And this would be an example of a more positive stock that has gone down 50% or more. That's just one example. I want you to make your own decisions, all right? And where do you start? Well, you can just start looking. Maybe go to FinViz or your favorite stock screener and find some stocks, some bigger ones. You could also look at smaller companies as well. That's okay. Just be really careful, please. All right, so my name's David Modell, and I can help you to look for these kinds of things and help you to put together a trading plan or investing plan. You can contact me at davidmodell@gmail.com. And hey, if you like this video, please give it a thumbs up on YouTube. Leave a comment. What do you think? Do you go dumpster diving, or do you not think it's a good idea? Let me know. I like when you give me that kind of feedback and talk to me, and I usually try to respond to as many comments as I can. And also, don't forget to subscribe to my YouTube channel and hit that notification bell so you'll get notified every time I come out with an educational financial video like this one. Thank you so much. I really appreciate it, and I'll talk to you again soon.